Hey, what's going on, everybody? I'm Duck, and I'm here to teach you what they didn't teach you in K through 12. Starting out, we're looking at Twitter as always. If you want, hit me with a follow. Alright? Leave a like and subscribe on the video too if you like what we're going to be getting into today, because let me tell you, the past few weeks, I know, for everybody, it's been a little bit painful. It's hard to watch the prices continue to go down and it be completely out of your control. But unfortunately, that's the nature of the game that we play. And that's honestly what makes it so fun to me, because you really have to do, your due diligence and be able to make really hard decisions with your own money. And so you know, the road to the promised land starts and ends with you, whether it's in business or in investing. And so I think that it's really important to get a well-rounded picture of what's going on. So that's what I want to bring you guys today. First thing though is this: Raytheon down as 2022 sales profit view missed their estimate. And guess what? War fixes this, right? This week, on top of everything, you know, all the dominoes falling in the market, doesn't seem like it could get any worse. And now it seems like, we have some sort of beef with Russia, as always, but sounds like we might be getting into it. And, you know, that might be profitable, or it could also be very damaging. We'll have to see how that turns out. But obviously, war is generally a revenue generator, and, you know, who knows? Maybe that's what the world needs right now, is just to, go to war after everything we've been through for the past 2 years, right? So, with that said, we'll go right over to the Wall Street Journal. Love the Wall Street Journal. But obviously, volatility, this is the VIX. This is an index that measures volatility in the market. Um, and it spiked to an extremely high level yesterday. And why is that? Because despite all the FUD that we've been seeing, yesterday marked the largest comeback since 2008. So we saw prices rise dramatically yesterday before the close of the stock market, and the same thing translated over to crypto. Obviously, we're interested into DeFi, and so FTM, I mean, it went on a crazy run yesterday. Luckily, the other day I was able to pick some up around like 198. I was really happy with those buys. I've been looking for under $2 for a while. And it like V bottomed right out of there. Obviously, this isn't like the same story with the rest of the market. Some things are still down, but generally we see a more positive trend, at least in the short term, where prices are maybe beginning to consolidate a little bit. This is like what I'm looking at in terms of Bitcoin. You see, we hit this support level, and we're just bouncing around in here right now. Maybe we come up, test, and are able to go back. Most likely what I see happening is we stay in a channel for a while until like the market decides what it is that it wants to do. A lot of people are talking about March being a decisive time for markets, when like the Federal Reserve finally begins to actually raise interest rates, which personally I don't think is a very bad thing, but everybody, wants to spread FUD, especially when sentiment is down, which we'll get into in a little bit. But back to the chart, I feel like it's pretty night and day right now. Obviously, as with any situation, we can go up, we can go down, but you just got to take this day by day. And I know it's really cliche, but literally, if you zoom out, you'll understand that crypto goes through losses like this on a regular basis. Right here, 31%. Okay? What did we just experience over here? 53%. Even in here. Oh, wrong one. Even in here, that's minus 22%, right? So obviously it feels really painful seeing this like bleed all the way from 67,000. But if you took advantage of the opportunity up here and you noticed that you had an all-time high, you shaved some profits off the top, you're probably sitting pretty happy right now. If you're bag holding, which I am holding all of my DeFi tokens right now because I plan to just continue to like generate yield off of them even if we do go bear because I think that by the end of the 2020 a lot of this FUD will just like iron out. So back to the Wall Street Journal. This is the reason that the stock market itself, which crypto tracks closely, has been falling. Investors are anxious about how the Federal Reserve will act to combat inflation by raising interest rates or shrinking their balance sheet. Most likely they're going to do both, right? And that's just like the fact of it. What is important to understand though is that the Federal Reserve is like the central bank in charge of controlling inflation in the entire world because the US denominates most of the world's currency. So it's their job to make the economy grow in a stable manner. And if they were just to continue to use the same types of tools that they've been using for like the past 2 years to support markets, we would definitely be blowing ourselves out of the water, probably close to something like the Weimar Republic, honestly. So I honestly think that it's important that the Federal Reserve begins to raise rates just so that we can normalize a little bit, so that some, overpriced, like tech companies, for example, really big COVID trades. I think that some of those need to just like revert back to their mean price to a fair value or get acquired. Like those are the scenarios that I see playing out, and I think that it's going to be the same case with crypto. Okay. Obviously, we just saw the whole time thing go down, and what did they do? They immediately transitioned that into a new project. Who knows if the same thing is going to happen with the new project, but obviously there are bigger entities that have their eyes set on smaller crypto projects to acquire the intellectual property and technology. Okay? Now, a little bit more FUD just to sprinkle on top of the cake. ETH2, of course, obviously seems like it's never going to come out, but they're rebranding it. So ETH2 is officially never coming out. Now it's called the consensus layer. And they're just doing it, honestly, probably just for a marketing campaign. Who the hell knows why they're doing it? They like make up some mishmash about like the devs and like clarity about the vocabulary bullshit, right? We like this is a story that continues to be played, whether it's Cardano, whether it's ETH, whatever you want to think, right? Like stuff takes time, and at the end of the day, when there's like financial consequences with it, takes a lot more time, right? And so I personally think that right now ETH is really good as a base layer. This is exactly what they're talking about in here though. Like the current ETH version 1 is going to be the base layer. Everything is still going to be put on it, and then the consensus layer is just a new way to secure the protocol. So pretty basic, but obviously I think that this might stir up some FUD. And to wrap this up, I just want to look at Phantom and Near. And I want to compare them because I think that it's important to see like where they both are, right? So I think Phantom right now is playing a leader in the market. For this pump back up, whether it's the leader to pump up, do a fake out, and then reverse, or to pump up and then retest the all-time highs, that is still in the books. Like we have to wait to see whether that happens or not. But right now, we might be able to use Phantom as a leading indicator for what other projects that are in DeFi, right? Layer 2s, like Near, how they might be looking coming out of today with today's Federal Reserve meeting and into the next few weeks. So Phantom literally touched the 0.786 Fibonacci level, which is the golden level, right? That's where most retracements happen, and that's where they reverse. What did near do as well? It hit the 786. But right now, near is consolidating. Obviously, near had a crazy run up like just last week. And so for steam to be coming off, that's perfectly fine. And I think that ultimately we're just going to see continued volatility right now. And that's why I say, like, it's important to understand like what's coming in DeFi, how you can hedge yourself, how you can earn yield off of your tokens while you're waiting for things to play out, and how you can continue to accumulate tokens that you're like really interested in holding for the long term passively. So with that said, guys, I think that this is a great place to wrap it up. I want to leave you with like just some fundamental ideas, right? Like, don't beat yourself up over the market. You cannot control it. And if like you can't stomach the pain of a drawdown like this, then you definitely should not be trading like risky assets like this. Okay? That's number 1. Number 2, what makes that feeling even worse is generally other people who are not in your shoes who are trying to tell you some sort of narrative, make you feel some sort of way, right? They're going to come up to you, they're going to be saying, look, looks like crypto's going to zero, blah, 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 right? I'm sure tons of people have thought throughout history that the stock market is going to zero, that anything is going to zero, right? Even residential housing, maybe. But it doesn't. Because once you have people backing an idea, ready to stand behind an investment, and convicted, then you really have an opportunity to create a market, which is what we've created. Over $1 trillion in total market cap in crypto. So you can't say that this thing is going away. Right now, obviously, there's less liquidity in it, and that causes for extreme volatility when things in the stock market, which is extremely liquid, become volatile. And the last and final thing that I want to say is to just touch on this one word that I just said, conviction. There is a very fine difference of conviction between bias, okay? And you don't want to have your biases confirmed by other people. If you're going to have a bias and you're going to be convicted by it, you have to do your own research to the furthest extent so that you can truly become convicted in what it is that you're going to be holding. Because ultimately, over the long run, crypto is not only an asset that can appreciate in value, but it is also something that you can use. So it's basically like you having confidence in your favorite restaurant, having your favorite dish at the end of every week, right? Obviously, we can't be as confident in the price action right now, but what we can be confident in is our prediction and our conviction for the future success of protocols and their ability to attract more users, to attract more liquidity, and to continue to function efficiently. So I hope you guys liked this video. If you did, hit the like button, give me a subscribe. Let's continue to grow together, and let's keep it groovy and ride the waves of this volatility, because like it's going to take some stomaching to do, but I'm going to be here with you guys throughout the whole thing. So let's do it. Have a great day, guys.